good morning and welcome to our monthly 5 and 5 video series. My name is Antonio Vaiente, Head of Business Development here at AZ Sestante. Once again, I'm accompanied with Mitchell Healey, one of the investment analysts here today. Morning, Mitch. Mitch, can you just give us a bit of background on what's happened in the past month with financial markets?
Yep. So August was another fantastic month for markets. Equities and fixed income finished the month positive, which was excellent to see. Now, on the global equity side, it was obviously a little bit tumultuous mid-month. You had some payroll data come through, a little bit weaker on the job market front. AI had a bit of a stumble, but markets finished in positive territory. Elsewhere in kind of the European side, again, finishing the month in positive territory, again, backed by strong earnings looking forward. Inversely, on the fixed income side, again, holding up quite strong. Markets are beginning to look at, where the Fed is going with interest rates. Again, our direction, what we think is going to happen is that the Fed is going to start to cut rates in the back end of the year. Importantly, that's going to work quite well for our fixed income strategies.
So in regards to the Fed and the interest rates there, what has the market priced in?
Market's pricing at about 2 cuts for the end of the year. Importantly, we think the Fed's kind of on the back foot when it comes to cutting rates. Again, they've been looking at the data too dependently, and we think there's opportunity for the Fed to cut more than 2 times this year. Inversely, on the Australian side, we think the RBA's generally done a pretty good job of cutting rates.
You'd be the first one to say that, but that's a good sign, yes.
Yeah, so we think, look, the market's, relatively well priced, and as such, we're starting to find opportunities on the global side in our portfolios.
Oh, that's great. And then when we think about equities and the like, where do you see things happening in the past month and going forward?
Look, we continue to see opportunities, particularly on the global side of the equity market. And again, looking for opportunities in the cheaper side, particularly Europe and potentially emerging markets in the future. We think whilst America has been kind of the center of excellence, when it comes to valuations, the market is quite expensive and we're looking for opportunities elsewhere.
And if we think a bit more micro and we look at the Australian Stock Exchange and the concentration risk towards banks and miners and the like, how are we positioned in that regard?
Yeah, absolutely, and it's a really important question. So when you look at the market today, we think there's massive concentration. In the top end of town, you're essentially dominated by banks and miners. When you look at the earnings, that is essentially, the profit coming through on these companies, it's relatively flat on a forward-looking basis. So as such, we're trying to find opportunities, particularly in the smaller cap end of market. We think that X20 to about 100 in the market cap spectrum is probably the sweet spot for us.
That's excellent. And just for the audience, can you explain what concentration risk actually means?
Yeah, absolutely. So concentration risk, AV, is essentially the proportion of your assets within kind of your portfolio. So what you don't want to do is essentially put all your eggs in one basket. That means that essentially your portfolio is going to be dominated by 1 or 2 names. And we think that doesn't represent investing, but more speculating.
Yeah, no, that's a really good point. And there's definitely a lot of risk going around when you think about the tech bubble over in the States and the AI bubble, you could call it, and what we're doing, how you talked about the domination of the banks and the miners within Australia, is something to be really conscious of.
Yep.
Thinking about that crystal ball again, and where we see markets heading and how our portfolios are positioned, what do you see happening for later September and into October?
No, it's a really good question, and obviously we are led by the data in many ways. The key data print for us coming up in the future is really the US inflation print. So what we want to see is that inflation print moderating. That's really going to give the Fed the ability to start cutting interest rates, which we think will kind of poise growth into the next 6 to 12 months. Importantly for us in our portfolios, really how we're positioned at the moment is across a range of contingencies. Again, what we don't want to do is have a binary outcome where our portfolios are dominated by one view or thematic. So importantly for us, we're diversified across asset class, across region, across style, across sector, to make sure that investors have a diversified mix of assets so that no matter what happens, we can essentially smooth that journey for clients.
That's excellent. And you can see that the portfolios have been positioned really well historically, and we've seen that through the numbers and the performance. So thanks once again, Mitch. Thank you everyone for listening in. Just as a reminder, if there's any questions or if you want to ask anything topical going forward for our next month 5 and 5 series, please email us at invest@azsestante.com. Until then, have a good day. Thank you.